Hello and welcome to the lesson. Today we are going to study the audit of cooperative societies, commonly known as SACCOs. Now, candidates, the audit of cooperative societies, also known as the savings and credit cooperative organizations, involves the specific considerations due to their unique characteristics and regulatory requirements. In our today's lesson, we are going to study some of the key points to consider in the audit of SACCOs. And the first key point to consider is regulatory compliance. Regulatory compliance. Regulatory compliance is the first key point. Regulatory compliance. Now, candidates, SACCOs operate within a regulatory framework specific to cooperative societies. And the auditor must have a good understanding of cooperative laws, regulations, and guidelines that are issued by regulatory authorities. The audit should ensure that the SACCOs operations comply with these requirements. So if you are to audit cooperative society, then you need to have knowledge on the regulations, the guidelines, and cooperative laws in the country. So when auditing, this is a key point to consider, the regulatory environment within which cooperative societies operate. The second point is membership and share capital. Membership and share capital. SACCOs are member-based organizations where members contribute share capital. And the auditor should review the membership records, should review the share capital accounts, and ensure compliance with the bylaws and regulations related to membership and share capital requirements. Number 3, the third point is the savings and loan portfolio review. Savings and loan portfolio review. SACCOs primarily engage in accepting savings from members and providing loans. And the auditor should review the savings and loan operations, including the adequacy of internal controls, of interest calculations, the loan provisioning, and adherence to lending policies and procedures. Financial statement review is yet another key thing to consider when auditing cooperative societies. Financial statement review. The auditor should examine the financial statement of the cooperative society, including the statement of financial position, the statement of comprehensive income, and also the cash flow statement. Do you understand? Do you understand that? Financial statement review. The auditor should verify the accuracy of the financial information, should assess the appropriateness of accounting policies, and accuracy of and ensure that compliance with applicable accounting standards and regulatory requirements. Should review the financial statements. Financial statement review. 5, internal control evaluation. Internal control evaluation is a key point, and it's only not key to audit of cooperative societies, but you remember when you are looking at the audit of banks and non-banking financial institutions, we saw that this is an important factor, including the audit of insurance, general insurance companies. Internal control evaluation. The auditor here evaluates the effectiveness of the SACCOs, the internal controls, the SACCO's internal controls, and particularly those related to financial transactions, those related to cash handling, loan disbursements, member record keeping, and so on. And this includes the internal control evaluation includes assessing the control environment, assessing the risks, the risk processes, what we call risk assessment processes. It also, internal control evaluation also includes assessing the information systems, also assessing the monitoring activities. Internal control evaluation. Number 6 is to do with the principles of to do with cooperative principles. Let me say compliance with cooperative principles. Compliance with cooperative principles. When auditing, the auditor should check the society's compliance with cooperative principles, because cooperative societies are guided by a set of principles that promote democratic membership control, the members' participation, social responsibility, and so on. So the auditor should assess the SACCO's compliance with these cooperative principles and any specific requirements that is set out in the cooperative bylaws. 7, regulatory reporting. Just like the banks, just like the insurance companies, cooperative societies are required to submit periodic reports to the relevant regulatory authorities, such as the central bank and so on. So the auditor should verify the accuracy and the completeness of such reports and ensure compliance with the prescribed formats and regulatory guidelines. So cooperative societies are required to submit periodic reports, and these reports must be submitted in a standardized format and guideline. So when auditing such an organization, the auditor should check whether the society complied, whether the society submitted the reports, and if the reports were they submitted in accordance with the prescribed formats and regulatory guidelines? So that should be done when auditing cooperative societies. Okay? Regulatory reporting. And candidates, it's important for auditors conducting audits of cooperative societies to have a good understanding of cooperative principles, as we had said earlier. Cooperative principles. Then there is, after that, having checked if the company has complied with cooperative principles and the auditor has checked regulatory reporting, if the company has complied, then the auditor can then generate an audit report. Number 8, reporting and disclosures. Reporting and disclosures. The auditor provides an opinion here on the financial statements of the cooperative society. When reporting, the auditor is supposed to give an opinion on the financial statements of the cooperative society, highlighting any material misstatements or non-compliance with regulatory requirements. And the auditor's report may also include additional disclosures. Other than just the opinion, the auditor can include additional disclosures required by regulatory accounting and auditing standards. So that's reporting and disclosures. So these are important points to consider when auditing cooperative societies. Number one, regulatory compliance. Number two, membership and share capital. Number three, savings and loan portfolio review. Number four, financial statement review. Number five, internal control evaluation. Number six, compliance with cooperative principles. Then number seven, we have regulatory reporting. And lastly, reporting and disclosures. Reporting and disclosures. And candidates is important when auditing cooperative societies to note that the auditor who conducts an audit of the statements of cooperative societies, such an auditor should have good understanding, first of all, of cooperative principles, should have good understanding of cooperative laws and regulations. The auditors should also keep up to date with changes in regulatory environment. They should keep up to date with the industry practices that may impact the audit approach and procedures. Additionally, when auditing cooperative societies, an auditor should have knowledge of the unique risks and challenges faced by cooperative societies, such as the loan portfolio management, such as risk associated with the member governance, and so on. All that knowledge is essential in conducting an effective and efficient audit of cooperative societies. And that will mark the end of our today's lesson. Just to remind you, we are studying the topic audit, evaluation and reviews, and we are looking at the audit of companies. We've so far done the audit of consolidated financial statements. We've looked at the audit of banks and non-banking financial institutions. We covered the audit of general insurance companies. Today, we have highlighted the key points to note when auditing cooperative societies. In our next lesson, we are going to study audit under taxation laws. Thank you. God bless you. Bye-bye.